the UK economy will benefit to the tune of billions in the first year after we leave. Almost certainly not true. The UK economy is very much on a knife edge in the run-up to the referendum. As Leave have moved ahead in the polls, the economy has taken a hit. You are seeing companies putting on hold plans for expansion. You are seeing businesses that depend on EU trade basically going on standby or looking to make contingency plans to leave the UK. The pound has dipped quite considerably since this all really kicked off, although in the last 24 hours has improved again as Remain have surged a little bit, or at least had a comeback in the polls. This is showing that the economy is really sort of nervous and very dependent on where this vote goes. The FTSE, although it has now recovered because Remain have had a bit of a resurgence in the polls, the FTSE last week lost something like 30 billion of share values in a day. What does that really mean, though? I mean, does that just mean that the likes of Cameron or Boris Johnson just have a portfolio that's worth a bit less in their offshore havens? Unfortunately, it's not as simple as that. The economy is this sort of big nebulous thing of money and influence and who pays what and how much this is worth, and what it boils down to is a weaker economy means less money in the pot to spend on public services. Share values being hit means that your ISAs and various investment schemes like that, especially even things like the one proposed as for younger savers that the government came out with in its most recent budget, all of these things can be hit by a downturn in the economy, by a downturn in share values. Private pensions are frequently tied to things like the share market, stocks and shares. So if the economy takes a hit in that respect, many things that you may depend on will be less. The amount of money will just be less. The things may be cut. You could see less return on investment. You might think, well, that's only for rich people. I don't have investments. If you've got a pension through your job, you've got an investment. If you've got any form of savings through a bank sort of savings situation, not a normal current account, but as like a long-term account or an investment plan, you have investments. But this still, you might be thinking, well, that doesn't affect me. I have to live hand to mouth. I don't have money to invest in anything. Fair point. Unfortunately, a downturn in the economy also means less money going into the government, meaning less money coming back out from the government. A downturn in the economy will see a weaker NHS. It will see less money available for health. It will see less money available for education. It will see less money available for housing. And again, you can argue, well, the government already isn't putting enough money in there. And no, the government isn't. And actually, it is government failings that are causing people to find that the school of their preference for their children is overcrowded, or they're having to wait 2 weeks to see their doctor, or they can't find affordable or social housing in their area. These are all failings of a government already not investing in these areas. So imagine what's going to happen if the government has even less money to invest. Things aren't going to get better. If they're already not putting enough in, and you take away some of what they have, how are they going to put more in? It just doesn't work that way. A shrinking of the economy will hit all of us. Now, you could argue, well, there's all of these billions go to the EU every year. Yes and no. The 350 million painted on the sides of buses and slapped across misrepresentative leaflets, being diplomatic there, that 350 million is not the real number that is paid to the EU in the first place. Automatically, there's a rebate on any figure we are paying to the EU. The rebate never leaves this country. So the 350 million, even if it wasn't a lie, would be misleading. There's money that never leaves the country, goes to farming subsidies, for example. Then there's money we get back from the EU invested into the more impoverished areas of the country. Why are the EU paying that instead of our government? Have a think for a moment as to, would we still get that investment in the less fortunate areas of the UK if the EU weren't the ones directing the money in that direction? Then there's the fact that it's basically a membership fee. Anything you join up to in terms of international agreements, international obligations, international commitments, international trade, will entail a membership fee, will entail cost. So we're paying out a certain amount of money that is vastly less than the amount of money we are being told by the Leave campaign. We're getting quite a lot of it back, and we are investing in membership fees to be in something that makes us a lot of money. So how are we going to save billions by pulling out of that? The money we don't pay in then means that the benefits that we get from the EU don't get paid back out to us. We will lose that. Looking at it, I've heard various numbers, some wildly optimistic, some much more realistic, and apparently Horizon did an independent assessment on this. And pretty much for every £1 we put into the EU, we get £1.80 back. So it's nearly doubling our money, and we get that by virtue of being in the single market. Now, this is all dry, tedious economic argument, and you're probably looking going, I don't have this, I don't have a £500,000 mortgage, why should I care? It boils down to, if the economy's doing okay, which it is, we're still recovering from the 2008 crash, but it's not doing bad. If the economy's doing okay, there's more money for infrastructure, education, health, housing, transport, you name it. More money in the economy means more money available to spend on the people, on you and I. Less money in the economy, less money in the government pot, means less money to spend on the people. Whether the government always spends it where it should, you can argue. I say it doesn't, but that's not the EU's fault. It's very much our government is deciding where it puts the money. But it is a simple fact. The less it has, the less of it we will see. And even if we're not seeing enough of it already, it's not going to get better if there's even less of it for them to spend or show in our direction.